I pretty much started off with explaining what time-based liquidity was, um, but also pretty much uh, how it works and what it does and pretty much how to use it. Now in this video, I'm pretty much gonna go in a little bit more in depth and focus in on how you're pretty much using time-based liquidity when you're trading, and how pretty much I use time-based liquidity incorporated into my trades. Because if I don't see any, and I've said this many times before, if you listen to many of my other calls, you pretty much hear me talk about, if I don't see any time-based liquidity sweep, or if I don't see any sweep of time-based liquidity, I'm not gonna take anything. And that's precisely pretty much what I do. I always target time-based liquidity, and I always pretty much wait for time-based liquidity sweep before entering any particular trade. Exceptions is for the ST. So now we're more or less not going into the STA, because for the STA pretty much need externals. But I'm going to pretty much talk about what time-based liquidity is and how to utilize it, right? Which is of course just one part of half of the part of the STA. And I'm pretty much going to go in on how I utilize it. So in last video, let's just do a brief recap of the what time-based liquidity is and what pretty much the certain components of time-based liquidity is. So as we have mitigation components, fair valuation components, and other mitigation components. Time-based liquidity is of course one of the components, part of liquidity, in which you pretty much it consists of an Asia range, which of course is from 1 o'clock to 7 o'clock UTC plus 1 or UTC plus 2, depends on which daylight savings you are in. You have a London range, alright, which of course extends from 9 o'clock right here, so it starts at 9 o'clock, ends at 13:00, and after 13:00, not 13:05, but like for example half an hour later, after 13:00, that becomes the high and low created at 13:00 becomes time-based liquidity. Alright, so the low or the high getting created during this particular range, ranging from 9:00. Remember what 9 is? 9 is also start delivery of the Fedwire injection period to 13:00. So after 13:00, the high and the low here becomes time-based liquidity. Alright? Alright, it just becomes a recap more or less. But 1 o'clock, hopefully you note this down, very important, very very important, to 7 o'clock, UTC plus 2 or UTC plus 1. Alright, it's very very important. Alright, then you have overall a London range ranging from 9 o'clock to 13:00. Alright, it's also very very important. The time-based liquidity during this London range, like previously explained, which gets created after 13:00, meaning you can't have a high here and it becomes time-based liquidity when you are in this period, meaning you need to leave 13:00 period, leave the range here, for it to become time-based liquidity. So for example, if you're trading at 11, the range ranging from 11 to 9 is not time-based liquidity, meaning you need to wait for after 13:00 and then the high or the low becomes time-based liquidity. Same thing goes if you're trading Asia, right? You're not gonna trade Asia and the range high because you won't know where the Asia high or low will be, because you're in the Asia range. Make sense? Hopefully makes sense at least. So you have 1 o'clock to 7 o'clock, that's time-based liquidity for Asia range. Then you have 9 o'clock to 13:00, which of course after 13:00 is time-based liquidity for London range. So this is London range time-based liquidity, the high and the low. Now what other time-based liquidity components do you have? You have a time-based liquidity components comprised of previous daily high and previous daily low. And like explained in the previous video, the previous daily high is the high after the day you're on. So it's pretty much, if you're trading here, this was pretty much last Friday. So if you were to trade on last Friday, time-based liquidity would be resting at this particular high and at this particular low. However, just looking at it from a look back of 2 days, this high and this low, if you were to trade on Friday, trading this candle would not be time-based liquidity. So it's just the previous daily high and the previous daily low, which is time-based liquidity. Alright, that's it. So it's just the previous daily high and the previous daily low, which becomes time-based liquidity at the given day you're trading. It is not 2 days back, 3 days back, highs and lows. It's just the previous daily high and the previous daily low. Now, same thing goes for the weekly range, whereas the previous weekly high and the previous weekly low is time-based liquidity. Alright? Previous weekly high and previous weekly low. Now, if you go back 2 weeks, this is not time-based liquidity. Alright, if you were trading here, this would then be time-based liquidity. So if you were trading on Monday the 18th November, alright, the high and low here would then be time-based liquidity. AKA you would have a time-based liquidity sweep here. So now let's just do a brief little recap here on what actual is time-based liquidity. So time-based liquidity is highs and lows get created at a specific range. Alright, that range can overall be from an Asia range, from a simple intraday Asia range, to previous daily highs, but also previous daily lows, and upwards towards previous yearly highs and previous yearly lows. But it needs to be just the previous yearly high and the previous yearly low. Can't go back 2 years and then think that's time-based liquidity, the high and the low. That does not work. So how do I use these things? Alright, so how do I use the time-based liquidity? Well, in my model, in the STA, I always need to wait for an alignment in the externals. Now, when overall the externals is alignment or is in agreement, that's pretty much precisely what I call. So I pretty much call when they are externally aligned. The only thing I need to wait for, or the only thing my model then pretty much tells me to wait for, is just the time-based liquidity sweep in the opposite direction, meaning you need the time-based liquidity. So of course, if you're watching the buy side, because the externals is, let's say the externals is bullish, right? If the externals is bullish, you're watching the higher prices, you're watching the buy side liquidity, you're wanting to wait for high prices, then you need to wait for time-based liquidity, sell side liquidity to get taken out for you to enter the buy. Alright, so you need a sell side liquidity in a form of an time-based liquidity to get swept. Then the market will pretty much make a great move, and that great move will overall be called by me an STA. So a great move, which of course you'll pretty much see this being a great move. We've taken out time-based liquidity here in the form of what? Previous yearly low. So if we go to 12 months here, as everybody can see right there, we have time-based liquidity resting here because it's the previous yearly low right there. We've taken that out. Now the externals pretty much is telling me, oh wow, we pretty much want high prices, right? The externals pretty much is in agreement that we should see high prices on euro. Now what happens then? Then you want to see, or then pretty much according to my model, a great move in that given direction will get created. Meaning we should see a great expansionary monthly move or monthly moves towards the upside here. And that's exactly targeting buy side liquidity. That's exactly what I'm waiting for. So that's my bias now. Alright, makes sense? Hopefully it makes sense. So let's go into an example of an overall little 5 minutes here. So looking at the 5 minutes, what everybody can see, pretty much I always use time-based liquidity. So here was a trade I took on last Friday. This was non-STA. This was like overall trading against the STA. So just a reversal. Because I was watching, like I said on Friday, I called this out by the way. So please go into last Thursday's call for everybody. It's uploaded on YouTube, where you can hear me calling overall that this would happen, that I was looking for this. So I'll pretty much link the video here for people watching it on YouTube later. And I said pretty much we would reach for these. However, we did not reach for it. Hopefully you guys took partials along the way. I think we're still going to do it, because I'll pretty much go through my buys later on the DXY, but also on USD. But we took time-based liquidity high right here. So what I was looking for is just lower prices. But we also took previous daily high. So look, took time-based liquidity, moved here. The only thing I was waiting for is just lower prices here, reaching for what? previous daily low, which is time-based liquidity. So the only thing I literally do is like time-based liquidity to time-based liquidity, or liquidity pocket to liquidity pocket. Is no harder than that, alright guys? It's simply the thing you can use, alright? But I use the range in many different ways. I would not call this an STA because it's pretty much trading against the underlying externals. Now, of course, you guys won't know what the externals actually is, so you guys won't not figure the STA out. However, you can still utilize the time-based liquidity components, because time-based liquidity components is the OP thing, alright? It's so overpowered and it's so easy to utilize, alright? Now, why I did not add everybody is simply because I want this call to be like a little call, alright? It will be a little call, it will be super good, alright? So, hopefully you now understand pretty much how I use time-based liquidity. I can also take another example of this. So, let's just focus in on this little area right here. Might not look anything particular here, but let's just focus in on this actually. So, like I said, I was looking for high prices here for overall, because the externals is overall in an agreement for high prices. So what I was supposed to do, and I was just entered by spreads, was that I wanted to look for the higher prices here. Like I want to take a trade, and you'll see it later. I want to take a trade all the way up, and it will be like a mega STA. This is what I call a mega STA. That pretty much guys would not pretty much know what that is, but everybody just hear me out. You have an original consolidation up here. That's my final take profit. Alright, so all the way up here, I pretty much entered and buy right there at this low right there. Low right there. That's where I entered a buy, targeting this. And I'm gonna go through my buys later and why pretty much I have that particular buys. And you guys pretty much will understand it. Now just looking at it, alright, the externals was bullish. So what did I do? I would look for time-based liquidity in the form of, sell side in the form of time-based liquidity. So you can pretty much see here, that was the previous daily low. So once we actually moved down towards 0000 here, pretty much a new day opened, meaning this became time-based liquidity. So what did I do? When the market took out the sell side here, I entered longs as a total soup, stop loss pretty much here, and then pretty much I have my stop loss like at break even here. So now I'm in buys targeting that high, and I pretty much send executions here. I know I was muted. I just needed to join from my phone, so I joined from my phone to send you guys these photos right there. So it was overall just because I joined through my phone. I don't know why, but I need to do that. I could have just copy pasted it. You can, I think you can have it in trades I take P&O, but it's not done. It's gonna be a swing trade, right? But I exited half the position here. So at this Friday, I exited half the position, and now pretty much I'm just gonna hold it. We'll see what happens, right? Just note that follow your own predictions here. Alright, don't just follow what I do blindly. I think we're going to be bullish on Euro. I think we're going to be bearish longer term for the DXY. So the coming 4 years, I think we're going to be bearish on the DXY. And I'm not going to say anything, but, pretty much, I've been bullish for a while on Euro. So now I've just been waiting for a buying opportunity. A lot of people would say, oh, but you've been wrong so much. But look, I did not trade. I did not take any buys here on Euro USD. Right? Because I was just waiting for a small money reversal, as you guys know. Like I asked everybody here to just, before even the market maker sell or buy model, and in this case this is the buy model, even happened here, right? Before, like when we were up here, what did I tell everybody? I told you guys, what would this be? An original consolidation, alright? Please go back and listen to the 7th. So lesson number 7. Please go back and listen to that call, alright? Please guys, lesson number 7. When I called out the original consolidation was going to form here. I know I was muted, but now I'm back. You have the original consolidation right there. Alright, I told you we have formed an original consolidation. We're gonna have a sell swing down for some overall time-based liquidity. I know the stream is gone. I know the stream is gone. It's not supposed to be there, guys. It's not supposed to be there. I'm gonna share it soon, so don't worry. I told everybody Alright, I told everybody. Alright, and I'm gonna show you guys here now when we go back into the charts here. So let me just load up the charts here. So here you go, guys. I'm gonna pretty much talk about this. So if we just scroll out here, and this was exactly what I talked about. At less than 7, we were up here, guys. We were up here. I told everybody to just, or pretty much told everybody to take a screenshot of the things that pretty much I had marked out. And I said we're overall going to reach down lower, reaching for sell side liquidity. I did not know how far we would go. However, I said this would be the original consolidation forming of a sell curve. And now what do you think we're going to have here? Yeah, it's pretty obvious. It's pretty obvious. Pretty obvious, guys. Alright? So, what do you think will happen now? Alright? Pretty simple to understand, right? But we're overall going to drop down into the lower time frames. I think I showed you. Here was my entry right there. Put my stop loss break even, and I sent the executions. Alright? Pretty simple. So, let's just jump into the DXY. So, looking at the DXY here, everybody. Looking at the DXY. What everybody can see here on the daily chart, I'll not go into the high time frames as I've covered it so many times, right? The bigger market maker sell model. I'll just show you here quickly. So here the bigger market maker sell model right there. What I said last week on the Sunday, I pretty much told everybody that we potentially would have a high here. I'm not going to say this is the high yet, because I could be wrong, right? But what I think at least is that this is the high. Alright, that's just my predictions, my expectations. Please, guys, stick to your own expectations and predictions and such. It'll pretty much end up better for you guys than listening to some other one or someone blindly. Alright, it's just always the case. You know, you should always follow your own predictions and bias and such. So overall, you can see an original consolidation right there. And what I think now during the next coming week is that I think we're gonna do, as a new month overall has started, I think we're gonna do a manipulation here. Alright, we're gonna open here. And as you know, we have consolidated for approximately 2 days. So consolidation, manipulation into this low risk sell. Small money reversal, you could say. But this is the small money reversal. But you can also have a small money reversal here, because this is going to be a market maker sell model, in a market maker sell model, in a bigger market maker sell model. Alright, this is going to be also the low risk sell. Alright, and I think we're going to reach down lower for this original consolidation, which we overall, I called out forming, etc, etc. Please go back into this lesson number 7, like I told everybody. Again, please go and look at it, because you guys won't believe me. And you guys won't believe me, I called out this as well. So go back to the last call. It's the lesson number 22, I think. So going in here, we have an original consolidation, which of course, once again, I called out. We pretty much went down lower with the first fractal right here. And then pretty much we reconsolidated, created a second fractal here. I think we're gonna just, as I told everybody on my predictions of the DXY, I think pretty much we're gonna do a low risk buy here again. So you're pretty much gonna have opportunity to buy in here again, and I'm gonna reach for this original consolidation up here. But also the equal highs getting created here. So you can see we have equal highs here. On the lower time frame, pretty much we're gonna see market opening up like this. I think we're gonna have next monthly expansion is gonna be bullish. So I think we're gonna open up here as the next month, and then manipulation, and then expansionary upwards. So it's gonna be good, guys. It's gonna be good. That's my overall bias, right? If you look at the overall the news events, etc, etc. So if you load up Forex Factory, I don't think it's necessary for us to do it, as I've covered it in the last call. Pretty much, I think the news events on Monday, pretty much, and this is my prediction, so please follow your own predictions, guys, is gonna overall reach down lower for EURUSD. Alright, as being the monthly, if you look at the monthly candle, being the monthly manipulation to the downside before the monthly expansionary to the upside. When do I think the monthly expansionary, real monthly expansion is gonna start? Probably Wednesday or Thursday. We'll see. It could also start on Tuesday, but we'll just see what happens, guys. Anyways, that's just my predictions. Hopefully, you guys really liked this call. I really appreciated it. Now, pretty much, you have some great sauce into time-based liquidity, how it works, how I use it, and some of the trades I've taken, so you pretty much can reverse engineer it, etc, etc. So just feel free to do it. So, alright, please feel free to do so. So a big W call, amazing sauce, alright. And I'm pretty much going to continue doing it. So I just want to have these sort of small calls. I think they are overall better, but this ended up being like a 40-minute call, literally. But hopefully it ended up going through a lot of the things you were wondering about. Now guys, see you all